Good afternoon. Good afternoon, everybody. Welcome to Paul's Monday Market Update number 225 for Monday, 1st of June 2026. We're back after a few weeks away. I was up in the Highlands of Scotland, driving around there, and of course, then we had the Whitsun holiday here. I hope you are all well. I hope you've enjoyed a good couple of weeks. I hope you're ready for the start of a new month and what undoubtedly will be another interesting week and an interesting month and an interesting quarter in an interesting year. Um, if you're joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you over the next 25 to 30 minutes, looking at strength and weakness within FX indices and commodities markets, taking a look at a few charts of interest that you might want to add to your watch list, and then having a look at live markets. It is not a signal service. It's not trade recommendations. It is just me sharing with you what I'm looking at the moment, which might be of relevance or of interest to yourselves. As always, you are very welcome here, but just remember that you are always responsible for your own trading decisions. And if you want a little bit more deeper help and support in your own trading, you can join the VTP Trader Accountability Group, which is all about building discipline, accountability, and consistency in your trading business. You can use that QR code there, okay, or as the bit.ly code there, or just ping me if you've got any questions about joining us for that. Next is XOM, Exxon. All right. So, it's been quite some year for, those energy companies. Not unsurprisingly, with Exxon, oil prices remain the kind of primary earnings driver, with geopolitical tensions continuing to influence those all of those energy markets, but of course, including crude. Exxon, they're a freight train in that sense. Okay, so they continue to benefit from scale. The strong cash generation, disciplined capital allocation, etc. But of course, they also remain heavily exposed to global energy demand trends, particularly from Asia and emerging markets. And not unsurprisingly, I think Exxon is very closely linked to XLE, the ETF, but also crude oil direction. All right, and so kind of any sustained moves in energy markets are likely to drive the price here. And so personally, what I look at this is that this has been a fantastic run. Okay, from here, this is where we started the year. Remember, that was Venezuela, which kind of pushed price, okay, and accelerated. But then what we had is, a bit of a rejection candle here, sort of end of March, start of April, and I would be looking at this now as a little bit of a head and shoulders pattern, a little bit of a Vulcan pattern here, and how we sort of kind of a bit of a ski jump. All right, quite a few different setups there for me, sort of starting to show up there, and then of course, as I said, a little bit of that risk on giddiness with the likelihood of the continued ceasefire. That means that that has an impact on oil prices, which of course has an impact on these energy producers as well. So I'm looking at here at kind of, we can see, I suspect we'll have a little bit of a pop, all right, on the overnight Iran news, but generally I'm looking at that as about a neckline around about $145 for a head and shoulders. If we can stay beneath that 20 period moving average as it rolls over, if it basically does what they call PO20 and then works its way down from there, okay, if we get good news out of US and Iran, that's what I'll be looking for at the moment. That's where my view would be with regards to Exxon. And if you look at XLE, it's not massively different to that chart on there either.